And we've never in history had something that could be a truly global free market system on Bitcoin. And so I want a couple things first. So that I always say that assumes Bitcoin stays decentralized and secure. And my assumption, everything, if we've never seen something that could stay decentralized and secure, it always got centralized, gold got centralized, everything else got centralized. If Bitcoin wasn't used as a medium of exchange, it will be centralized, and it will be centralized.
Jeff Booth, a renowned entrepreneur and strong advocate for Bitcoin, has long championed the cryptocurrency's potential to create a decentralized, secure free market. He believes that Bitcoin's true value lies not in growing against the US dollar, but in fundamentally repricing the entire global economy. However, recent developments in the crypto market have Booth sounding the alarm. The current $150 million frenzy surrounding Bitcoin exchange-traded funds, ETFs, may be driving us toward an inevitable crash. The $150 million inflow into Bitcoin and Ethereum ETFs in recent weeks has caught the attention of investors worldwide. As per Soso Value, Bitcoin ETFs have seen net inflows of $105.84 million in a mere 5 days, as of September 25th, showcasing a renewed confidence in Bitcoin's decentralized nature. On the surface, this seems like a victory for Bitcoin's legitimacy and widespread adoption. But according to Booth, this optimism is masking a more dangerous reality. The problem? Many investors are converting Bitcoin back into fiat currency through these ETFs, strengthening the very centralized systems Bitcoin was meant to disrupt. By pricing Bitcoin in US dollars and perpetuating fiat systems, these ETFs are moving away from the cryptocurrency's original purpose, decentralization. This short-term financial gain could undermine Bitcoin's true revolutionary potential and create a system of false security. Booth argues that this shift is propping up existing inflationary and control-driven systems, keeping the status quo in place and limiting the free market that Bitcoin was designed to unleash. Rather than encouraging decentralized use of Bitcoin, the frenzy around ETFs and the conversion to fiat hinders the cryptocurrency's ability to foster a truly decentralized economy. In his view, this ETF boom is a symptom of centralization creeping back into the crypto space. Watch the interview clips to learn more about Jeff Booth's chat. Please like this video, subscribe to the channel, and enable post alerts for future content. Enjoy the video.
And we've never in history had something that could be a truly global free market system on Bitcoin. And so I want a couple things first. So that I always say that assumes Bitcoin stays decentralized and secure. And my assumption, everything, if we've never seen something that could stay decentralized and secure, it always got centralized, gold got centralized, everything else got centralized. Here's how I look at it. Instead of saying Bitcoin, say this: a decentralized and secure protocol, an open, decentralized, secure protocol that anybody can use, permissionless, that's bounded by energy. And imagine what that thing bounded by energy would look at versus a piece of paper pricing that thing. And so the thing bounded by energy that's decentralized and secure would be repricing the world, the free market that I'm speaking of. It would be repricing everything versus the piece of that protocol, right? My house would be falling in value, energy prices would be falling in value, everything. But what most people are doing is they're taking Bitcoin, the thing that is operating perfectly in the free market, they're converting it to a fiat piece of paper and believing Bitcoin's going up to price things. Does that make sense?
Yeah.
So they're right. So they're actually making, so you wouldn't, if you lived in Argentina, you wouldn't, or if you lived in the US, you wouldn't take your US dollar to Argentina to then price things. You don't take a currency to another currency to price things. You use a currency to price things. And so what people are doing, thinking Bitcoin's going up, is they're actually giving more strength to the system that's stealing from them.
It's like the Fed. It's like,
and forget the Fed in this. So just imagine a system cannot let the free market system work. It has to drive inflation. Otherwise the entire thing fails. So it cannot let the free market work. And you are in that system, and you would never vote to let a deflationary spiral happen. You would never vote to have your house fall in value completely and every bank fail. So you are part of the system that emboldens the politicians to steal from you because you believe in the piece of paper and the entire construct of that. And then you're taking that construct that is exactly opposite from the free market, and you're using that construct to be able to trade in Bitcoin. So what that would do, and this is, we can get into some of the things why I know that I'm very positive Bitcoin will be used as a medium of exchange and everything else as well. And this is why we created the venture fund, to be able to build kind of all this other technology that would allow it to be a medium of exchange. But what that would do naturally is you would be making, so if you knew, let's back up. If you knew everything I knew about Bitcoin at layer one, and you couldn't stop it, there was no way, and you just reinforced that it's borderless, nobody can stop it, it just gets stronger, more decentralized, more secure. And you knew if it became a medium of exchange, all of the control structure, all of the institutions that steal from you at a crazy rate to get stronger, all of the people in there would be hurt by the free market, because they wouldn't actually be, but all of this control structure would go away. And that control structure was the entire global rules order. What would you do? And what you would do is you would try to consolidate Bitcoin at layer two. You would use it as a currency. You would say, let's use this as a base layer of our new currency. And you would get everybody to use the derivative instrument of Bitcoin instead of a medium of exchange.
Right.
In the US dollar, to be able to consolidate layer two. And all you would have done is gone from gold to petrodollar to Bitcoin, and nothing would have changed.
Worse yet, the rapid inflows into Bitcoin ETFs could lead to dangerous consolidation measures. As more institutional investors enter the fray, larger organizations may begin to exert control over the market, threatening the decentralized ideals Bitcoin was founded upon. Booth warns that this could result in a massive financial collapse when the bubble inevitably bursts, bringing the entire ETF-driven market down with it. For Booth, the solution is simple but challenging: the direct use of Bitcoin, not its reliance on fiat conversion. Only by embracing Bitcoin in its true decentralized form can we avoid the disastrous consequences that the current ETF boom might bring. The current frenzy may seem like a win for Bitcoin, but if Jeff Booth is right, it could be leading us toward a financial crash. Let's go back to the interview and watch more clips to gain insights from Jeff Booth.
Same reason you wouldn't let your house go down, and same reason you're pricing Bitcoin thinking it's going up. It is not. It's repricing the world if it stays decentralized and secure. And there's a massive potential attack caused by everyone's actions within the system trying to make it go up in US dollars. And they are all part of a centralizing force that would, so if you think of it going up in US dollars, you are part of this that gives this actually, or that risks Bitcoin. Bitcoin at layer one couldn't scale to 8 billion people. Right. So the trade-offs to keep it decentralized and secure meant it was ineffective as a currency. And you had a whole bunch of people early on that wanted to make bigger block sizes, kind of Bitcoin Cash and other things, to be able to solve that trade-off. And then there was a massive fight in 2017, and there's a chain split because some people realized it's critical. The decentralization and security is the critical thing, because if it gets centralized, governments will stop it, right? The person who controls the nodes stops it. But the nuance of the people thinking it had to be used as a currency is actually also right. It was just the way that it would be used as a currency in layer two, in Lightning and Liquid, rather than layer one, which would sacrifice the trade-off. If you say, there's a whole bunch of people that say Elon Musk, free speech, he's saving free speech. Well, you can't save free speech from a centralized centralized system. He's on one say is free speech, and the other he says, I'm going to listen to the laws of the land. I'm going to let China do what they want. They can say it, they can turn people off. And those things are,
And Brazil's got me by the short hairs.
yeah, but each of those things are so it sounds like a really good fight, but you know the power of the centralization. But if Harris gets elected, what do you think is going to happen to Elon Musk's information, right? And so there is no solving the problem from a centralized system. It's impossible. That's actually the brilliance of Bitcoin. It had to be decentralized and secure. So one of the why people really like Fedi or Fediment, what we built, or what we helped fund Obi and team to be able to do, is they took Chaumani Cash, which was probably a 20-year-old technology, but almost a cryptographer's dream, super private, super secure, and they embedded that on top of Bitcoin multisig. So what that means is you and I, let's say my family could have guardians. We could be who could set the rules for that federation, and the rules peg in Bitcoin through Lightning into that, and offer unlimited transaction speed with no fees inside that, but also gain complete anonymity. So no, the guardians can't see any of the messages or the transactions. Fedi as a company can't see any of the transactions or the messages. It's complete privacy. And because it's complete privacy in that type of scenario, how it gains, it creates almost the free banking era of I can have my own family federation. I can invite friends into it. And as long as they trust that I'm not going to conspire with two people to take their money, right, or three people, then it's safe. But you could set this up in a way that you don't know the 5 people, so you couldn't conspire with them in a way. And every transaction on top of that, which is on top of Bitcoin, because it's built on top of this layer, you have Bitcoin rails in complete circular economy and privacy of communication that's unattackable. That is spreading so fast right now because it's all built the same way. Nodes of people of trusted networks that are all interoperable.
Jeff Booth believes Bitcoin has the unique potential for a decentralized and secure free market system, but points out that it must remain decentralized and secure. Historically, similar systems, such as gold, have been centralized. Booth sees Bitcoin as an open, decentralized system bounded by energy that might reprice the globe and potentially lower asset values. Meanwhile, the U.S. Securities and Exchange Commission's (SEC) decision to allow options trading on BlackRock's iShares Bitcoin Trust (IBIT) looks to have provided the fund a significant boost by expanding its offerings. IBIT has added $184.38 million, bringing its total net inflows to $21.22 billion. This development streamlines and secures Bitcoin investments for a larger investor base. The Bitwise Bitcoin ETF, BITB, received a modest $2.07 million net inflows. In comparison, ARK21 shares Bitcoin ETF, ARKB, and Fidelity's Wise Origin Bitcoin Fund, FBTC, suffered outflows of $47.41 million and $33.19 million, respectively. Notably, the trading volume for IBIT was $795.88 million on September 25th, marking the third lowest trading day since its inception in January 2024. Ethereum ETFs are also exhibiting indications of growth, with net inflows of $43.23 million on September 25th. Grayscale Ethereum Mini Trust led with $26.63 million, increasing its total net inflows to $292.23 million. BlackRock's iShares Ethereum Trust, ETHA, added $9.38 million, keeping its lead with $1.11 billion in net inflows. Fidelity's Ethereum Fund, FETH, received $6.45 million of the day's inflows. Investors expect the SEC's judgment on ETH ETF options, trading by mid-November this anticipation, and recent rise point to a potential turnaround for Ethereum ETFs. Macroeconomic uncertainty and the negative red timber period limited Ethereum's performance. Investors are careful about future events as the market continues to rise and confidence grows. As we wrap up, what do you think of Jeff Booth's warning? Could the $150 million Bitcoin ETF frenzy really lead to a financial crash? Or is it just hype? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.